Good morning, everyone, and welcome to this webinar by World Trade Center Utah and Dorsey Whitney. We're glad to have you here on the line today. Looks like we're still waiting for a few more people to get on, but they can join in as they sign in. So thank you all for being prompt. My name is Jim Porter. I'm the Trade Services Manager at the World Trade Center Utah. Our goal is to lead Utah's international business development and elevate Utah's global status to promote prosperity and build economic resilience across the state. To do that, we empower businesses to increase their sales internationally, and we attract foreign investment and facilitate international partnerships and work closely with partners like Dorsey and Whitney as we try to elevate Utah's status across the world. One of our key responsibilities in all the work that we do is keeping abreast of the trends, and the tensions that are going on across the world, especially in trade, and then to educate Utah companies about those challenges and the new opportunities that are available. And so we're grateful for Dorsey and Whitney, for Troy and Dave especially, for putting this together so quickly, for being willing to really get on the ball here to make sure that Utah companies knew how they could deal with some of these trade challenges and really some of the uncertainty that's being caused because of policies that are being kind of pushed out by tweet in Washington. So we're really grateful to have them both on the line. They're both experienced and highly qualified attorneys. And you'll get to hear a little bit from them in a minute about their backgrounds. But grateful to have everyone on the line today. Welcome, and I hope that this is a valuable and enjoyable experience for you.
Hi, everyone. This is Troy Keller from Dorsey and Whitney, and Dave Townsend is on as well. And Jim, I'll just want to quickly say thank you for that. Thanks for letting us be part of this. We love what the World Trade Center does, and we think, especially for Utah, you've just been great because the global perspective becomes more and more relevant, and you guys, are a key resource and advocate for Utah companies abroad. And this did come together very quickly when the Mexico announcement came. We knew that was particularly relevant to Utah given the significance of that trade relationship, and so we said let's scramble and put something together, not just about that, but generally on trade. And as we'll talk, the Mexico issue is quieted down, hopefully gone away, although I doubt that. So we'll talk about that a little later. So by way of intro, I'll introduce myself and then let Dave introduce himself. I'm based here in our Salt Lake office, spend a good amount of time in D.C. as well. My background, I've been in-house with multinational companies, and I've advised multinational companies over the course of my career. I do a variety of things. I have a corporate background, but also do government relations. Really, the way I like to think of myself is to help companies just on the legal side to think through their strategies for their issues and their challenges. But when it comes to areas that require deep substantive knowledge, I have the luxury of being able to pull in people like Dave from around our firm around the world. So. With that, I will turn it over to Dave.
Thanks, Troy. Dave Townsend here in Minneapolis. I'd also like to start by saying thanks to Jim Porter for joining us today and in the World Trade Center Utah for helping organize this and put it together. There's a lot of trade issues that we're following nationally, but in every part of the country, you don't have to look very hard to see the impact on businesses and in the economy, and both good and bad. By way of introduction for me, I have always focused on international trade matters, both national security related on the export side as well as tariff related and customs compliance on the import side. And, I think in terms of the big picture here, through the course of my career, the last 2 years have really refocused this area of work from, particular product lines, particular products, a select few companies who really have to pay attention to tariffs to, almost any company that's doing cross-border transactions is now thinking through some of these issues. So it just really applies much more broadly than it did in the earlier part of my career. A couple of administrative items. First, if you are listening in on this and participating to get CLE credit, you need to download the attachment from our reminder email, and that will allow you to get CLE credit. Second, you do have the ability to type in questions to your to the webinar that will go to us. We will try and answer some of the questions at the end, and if we're unable to get to your question, we'll look to reach out to you after the webinar. So we're going to start sort of taking a tour through what has happened over the last 18 months, just to give you a summary of what has taken place, and then hope to give a good amount of time in this webinar after sort of giving you the lay of the land to look at some strategies and some common themes that we're seeing when we're helping clients navigate this area.
Great. Thanks, Dave. So, I'll just start. We're on the slide talking about this new era in trade policy. I will, it used to be over the bulk of my career, like I mentioned, I was, working with various companies, and trade matters were typically not at the top of anyone's priority list. I mean, the world has been relatively stable for a long time in terms of trade, and people knew what the tariffs were, and it was really relegated, day to day anyway, to compliance. But over the last year and a half, all of a sudden, it is headlines in newspapers. It is, almost every major company includes it. The impact of tariffs on them in their earnings releases, and so all of a sudden, trade has become very sexy. And so, Dave, I wanted to ask you, what? I mean, maybe it's a dumb question, but in your view, what has changed from the historical? And do you agree with what I just said?
Yeah, I mean, I do. I think through my career, I've often been involved in litigating in these trade disputes with respect to particular product lines, and those can be big cases that have a huge impact on companies and industries. The kind of litigation I'm talking about, anti-dumping, countervailing duty, safeguards litigation. But those apply to the select products that are chosen by the U.S. industry. What we're seeing now just applies so much more broadly and hits so many more companies than what we saw before. And also going to sort of your wheelhouse, Troy, it's become very much even more political than it was before, so that understanding the political dynamics of what's going on is often critical as well.
Yeah, that makes a lot of sense. And your point about the politics, it certainly has become top of mind politically as well, and I think the president has felt a mandate in this area to try to even create, as they put it, fair trade around the world. And he's, by and large, with the exception of some measures, he's received a lot of support from his party in Congress. I think not at first, but over time, he's picked up a lot of that support. Things like Mexico clearly didn't, but we can touch on that a little later. But yes, I think politically it's a new era as well. And even in states like Utah, we're not a coastal state. But the impact has been significant here as well. Jim, what you guys see at the World Trade Center, do you agree with that?
Yeah, Troy, I think you're exactly right there. The tariffs that have been put in place over the last year and a half or so have significantly impacted a number of Utah companies across a number of different industries. And that's because, though you might not recognize it, as Troy said, we're a smaller Rocky Mountain state, but we're On the international scene, we're very active, very plugged into global supply chains. I think of some of the medical device companies that we work with that provide diagnostic equipment or others who oftentimes their product will go back and forth across between the U.S. and China maybe 2 or 3 times over the course of its production. Companies like that are, of course, hurting really hard, but even not on the tech side, but across Utah's economy. Farmers especially are being hit. We see that commodity prices for farmers are decreasing across the board as retaliatory tariffs and boycotts against our soybeans and other agricultural goods has created a flood in domestic and local markets. So you're seeing this all the way from agriculture to high tech, and then of course in those who import steel and construction materials. Pretty significant impact across the board for Utah companies.
Mm-hmm. Yeah, that is significant and hits a lot of industries, a lot of areas. Okay, good. So let's we're going to progress through. As Dave mentioned, we're going to try to touch on some of the categories and areas where these tariffs have come, really to help people have some perspective, and then we'll dive into potential solutions and strategies. So Dave, I'm on slide 6 here on the Mexico tariffs. And we all saw the news over the weekend that a deal was reached with Mexico. These are not going into effect. And as I mentioned before, this is one where there was not a lot of support for the president. Dave, how safe, do you feel like the Mexico-U.S. trade relationship is then on solid footing, or are there things that still worry you in terms of this dynamic?
I think the one thing that could cause this issue to reemerge is that with what the president did, it's unclear whether Mexico is going to be able to act in a way that satisfies the White House, and so the same thing could reemerge. I think one thing for companies to take away from what happened with the proposed tariffs on all items from Mexico, which I think is why it's still worth talking about, even though it has gone sort of by the wayside over the weekend for the time being, is this was a wake-up call for companies to examine, one, how reliant they are on Mexico for their goods, and 2, how quickly their duty-free access under NAFTA could be revoked. It was something like 10 days from the original announcement to what would have been today, the first day that the tariffs went into effect. So I think that the takeaway is, if as a result of this, how well were you able to get a sense that your company, get a sense of what the impact would have been on your company and being prepared to sort of prioritize these issues as they would hit a company. I guess, Troy, a question for you that our audience probably would find interesting is what political dynamic made this different than perhaps China, where the trade conflict continues with no end in sight.
Yeah, that is interesting, and I've been trying to think through that the last little bit, because China was all about the trade relationship. It was about the the fair trade. I don't think, and while that has emerged as a political point from time to time with Mexico, certainly not to the same degree. This time it was about the immigration issue, and this was used as a lever on that. And given how closely intertwined, geographically and in the manufacturing that just goes back and forth over the border with NAFTA, particularly in the automobile industry, but in a lot of industries, I think that was just too hard of a pill to swallow. What I've heard is that, I think we saw in the news, the coverage that very few people in the president's own party on the Hill supported this. And even the White House, I've heard that other than perhaps Peter Navarro, there literally no one supported it in the White House either, which is which is telling on this one, because I think on the other ones he has been able to build quite a bit of support. Jim, this one's particularly scary for Utah. I mean, I've seen the number we put in our slide here: 3.6 billion, imports from Mexico, and Utah's the only place where Mexico has a consulate here, where the few countries have a consulate in Utah. To be honest, I'm not sure what is behind that trade relationship between Utah and Mexico. Is that something that's specific to one industry, or a little more broad spread?
No, it's pretty well broad spread. Mexico has been one of our largest and most consistent trading partners over time in terms of how much we're exporting and importing from them. They're a key partner not only as an export market, particularly for agricultural goods and transportation equipment, but also back to Utah in transportation equipment, medical device manufacturing, and a few other areas where, like I said earlier, global supply chains will span both Utah and Mexico in this way. So Utah's really benefited from the consistency of this relationship here. I think, and these tariffs threaten something like another $180 million worth of new taxes, essentially, on American goods that would be passed, at least initially, directly to Utahns, directly to Utah consumers, until such a time as there could be some deals worked out between Mexican suppliers and Utah buyers. And so while we're glad to see that these tariffs haven't gone into effect, I think the business community is relieved. At the same time, we rely on the consistency of the relationship here. And the more consistent we can keep that, the better for business for everyone.
Yeah, I think consistency is so key to businesses. Yeah, okay. I mean, it's a predictability, because when you add more variables, it's just harder for investors, harder for managers to determine what to do going forward in the future. Yeah. We'll touch on that a little later. Okay, good. So moving on to the European Union U.S. aircraft dispute, and this is one that I think caught a lot of us off guard. I mean, it had been brewing in the world, been brewing at the WTO for quite a while, but I think what caught us off guard is all the products that it picked up and proposes to put tariffs on that are completely outside of the aerospace industry in many cases. And so Dave, on that point, to what extent is this type of thing, should we expect this as part of the new world order in a sense of being continually surprised, or what? Want to just, if you don't mind, go into a little bit of the background on this one and help us see, like, going forward, what to expect, whether this will or won't continue to surprise us, I suppose, in terms of what gets picked up.
Sure. Yeah, this is among the topics we're talking about today. This is really the only one that's not unique to this administration in terms of how it was initiated. This was pursuant to a long-running World Trade Organization dispute between the United States and the EU. The EU is raising complaints about subsidies that are given to Boeing here in the United States, and the United States is complaining about subsidies given to Airbus by the EU member states. And after 15 years of on and off litigation, they finally got to the end of the WTO resolution process, whereby, because the subsidies have remained in force, the countries are given authorization to impose countermeasures. I think the one thing that makes this a big development in trade is just the size. I mean, $11 billion in covered imports from the EU. The EU has proposed roughly the same on exports to EU member states. So it covers a lot of trade. It, as you noted, Troy is sweeping in a lot of industries and companies that were not probably following the aircraft dispute until they saw their products on the proposed list. And, we've come to the end of the notice and comment process here in the United States with respect to the products proposed for tariffs. Although, the advocacy continues for certain industries to hopefully avoid avoid the list. Just in terms of what's coming next, there will be a review by the WTO of what the United States has proposed and the EU has proposed, and I think there's a good chance that the total goods covered under this would be significantly reduced. But until that happens, companies need to be following what's going on with the proposal. One thing might be good for you to speak to, Troy, for our audience here, not related to this, but EU related, is what's going on with Brexit, sort of another example of a jarring and unpredictable event that could impact investment and trade.
Yeah, it's good. It's a good time to mention in this as we're talking about Europe and the EU-US relationship. The UK, for example, is, believe it or not, the largest trading partner for Utah. I think that is, Jim, correct me, but what I've read is that's all pretty much focused on our minerals and our mining industry. So it's somewhat, contained, but nonetheless, it's a significant relationship for the state. And when you throw Brexit on top of, a broader, relationship that Dave just described, where the imports are, where the tariffs are rising, it makes that part of the world all of a sudden very complicated. You're going back to what we said in the past, it used to be, especially the U.S.-Europe relationship was very steady for many years, and this, Brexit adds another level of uncertainty to it. It's also a good example of how, as companies are looking at strategies for their products, you need to not just look at the U.S. relationships with other countries, but unfortunately, you've got to also look at what's going on in other parts of the world. Because if, for example, Brexit, when that happens, especially if it's done without a trade deal being put into place between, a hard Brexit as they call it, then to the extent your supply chain involves the UK and Europe, you're going to be looking at, at multiple levels of tariffs, and that can be very painful. Last thing on this slide, I would just note that if you haven't already, do click on that link, because while it seems to be all, like as we mentioned, it picks up a lot of other products other than outside of the aerospace industry, and we know, some companies have sort of been surprised to see their imports listed on here in areas that are completely outside of this. Jim, anything else on this?
No, I think you're exactly right. I mean, as Brexit continues, and we wait to see what kind of a Brexit there really is going to be, we see London actually declining a little bit as a financial center. Troy mentioned that we export a lot of minerals to the UK. One of the primary mineral exports we send to them is actually gold, believe it or not, and we send it to them because they are a financial center. So I think it's in the tune of more than I think $4 billion, more than $4 billion of gold was exported out of Utah to London next year, and those that $4 billion is in jeopardy so long as London is not as well positioned because of Brexit to be that financial center for the globe.
That's a great point. And just go off trade for a second, we help a lot of companies with joint ventures internationally, and London historically has been a great place to go house your joint venture because it's a financial center. It's viewed as, maybe, it's sort of somewhat neutral because most of the deals are between, the U.S. and Europe or the U.S. and Asia, and that's seen as kind of plus it's just a very nice city. People like to go there.
Yeah.
But to your point, if it sort of, if it's not seen as a place where, financials that has that financial center strength, and we end up going instead to places like, like Singapore, also a very nice place to go, or Hong Kong, those are great, but in my view, not as friendly of an option as London.
I think that's right.
Okay, so let's move to the big one, and these are the China tariffs, and these have been definitely the most prominent of the things we'll talk about, the most dollar value at stake. Dave, would you walk us through a bit of the history here, and more importantly, what we see coming down the pike still?
Yeah. So, you've all been seeing China tariffs in the news, the U.S.-China trade relation in the news, negotiations between the the two governments on trade and investment-related measures. These tariffs, just as a bit of background, were put into place because of unfair intellectual property practices in China, long-standing concerns that have been identified by U.S. businesses doing business in China, whether it's through a joint venture or investment in China, subject to what are unfair and onerous IP-related policies, at least from the perspective of the administration. So they initiated this process called a 301 process to address the unfair trade measures. And we've summarized it here. It basically covers everything now, at least as it's proposed. The first two lists have been in effect now for months. List 3 is going into effect right now at the 25% rate, although there were 10% tariffs going back to last year. And then List 4, which would cover basically everything not covered under the first 3 lists. It remains a proposal. It's still under consideration by the trade representative in the White House. But even today, President Trump was saying he intends to follow through on that if progress is not made in the trade talks. So the net picture here is that all goods from China are subject to tariffs, either already in effect or as proposed, with certain exceptions. And the exceptions are for certain medical devices, pharmaceutical products, and rare earth products, but also there's an exclusion process that we'll talk a little bit more in depth later in our presentation here.
I would just add that politically this one is different than. We would not expect this one just to go away like the Mexico one did. I think people are dug in different ways. The U.S. for the administration and really for the country to save face. They can't, they've got to really insist on some of these changes that are very painful for China. This is one that's going to take a while to sort through. And even if, as Dave mentioned, Trump has a great meeting with President Xi at the upcoming G20, even if that turns out great, I think maybe List 4 doesn't come into play, but nonetheless, that doesn't mean that anything else is really going to be lifted until I think there's some kind of probationary period at a minimum. I just see this taking a long time. Anyway, let's keep moving in the interest of time. India GSP. Dave, this is this one I think is probably not familiar to a lot of people. Do you want to summarize for us, what the heck is GSP and how is this and how big a deal this is for the U.S.-India sort of trade relationship?
Yeah, the United States, goods from India into the United States, many of them receive preferential tariff rates under the Generalized System of Preferences, or GSP. And India, along with a lot of other countries, were given these preferences as a way to boost their economies and boost the economies generally of countries that had a lower GDP. And so the Trump administration is announcing that they're going to have wholesale repealed the GSP status for India. So a lot of companies, I've seen through the years, rely on GSP, have to do a lot of customs-related compliance work to make sure that their products meet the GSP rules. So it's important to them, and that for products from India, they can no longer get duty-free status under GSP or reduced tariff status. Troy, I guess my question for you is whether you see this as the beginning of a volatile trade relationship with India, or if this is just kind of an isolated incident.
Yeah, I think India was for a while. Every once in a while, the Trump administration would sort of poke at things India was doing. They do things like cap the prices you can sell medical devices at in India. They do a few things. They require companies when they come over to source significant portions of their their products from India or offset that in some way. And so they do create their own kind of, not very different from what China, people allege China to be doing in terms of stealing technology. Not that kind of environment, but the government does sort of, add some requirements that you tend not to see in most fully developed countries. So I think the administration got a lot of pressure from certain trade associations to take the step it's doing, so I'll say one thing. I don't think this is one that in theory it could be, we could go back to the GSP situation, which would be India would be very glad for. I don't really see that pathway. This felt like more of a, well, India, if you're not going to, act the way we want you to, we're not going to give you this benefit anymore. And so that, I think, was a shot across the bow. India has threatened that they will, they're considering retaliatory tariffs, and they're in a position to do so. Following the recent elections, Prime Minister Modi was I think surprised the world in how successful he was with the mandate that he got. I think people thought he'd been severely weakened over the last year or two, and the election showed that he remains at a pretty strong. The BJP party remains at a pretty strong position, and so I think that there is risk of that. I think India is a great partner in so many ways. It's a great opportunity for because of the population growth there. It'll surpass China in a few years. But it comes with its own stickiness, and I think that the trade relationship now all of a sudden feels like there is some risk to it. Okay, let's go to the next one. And Dave, the other day my wife, who has had a Huawei phone for a few years now, she said that she got some notice from her carrier saying that they would not be updating, upgrading the software anymore on a Huawei phone. And I thought, wow, the stuff you see in the headlines is trickling down to my household. Is that what on this slide on the product-specific national security tariffs? I mean, I guess we've all seen the aluminum and steel things. I hadn't thought, and maybe I'm wrong, but I hadn't thought of of some of those impacts being on these consumer products like we carry around. Is that right? Is that what this category picks up? Does it have that kind of an impact?
The Huawei-related restrictions are they're also national security related, although they're kind of under a completely different legal regime. What happened with Huawei targets U.S. exports to Huawei and its 68 global subsidiaries. And so, Troy, you'd be surprised that your wife's phone would be affected by something that targets exports, because obviously your wife is using it here in the United States. But those same restrictions apply to not just goods, but also technology and software. And so users of Huawei equipment here, including, for example, handheld phones or telecom equipment, often have to communicate with Huawei to get software patches, software updates, and to keep their products up and running smoothly. And that arguably is covered under what the United States government did now a few weeks ago with respect to Huawei. So you're seeing impacts not only on U.S. suppliers to Huawei, but also even U.S. consumers of Huawei products or products related to what Huawei does. So to the content of this slide, also for national security reasons, the Trump administration has imposed tariffs on aluminum and steel. They've threatened to impose tariffs on automobiles and automotive parts. That was a recent development. There are ongoing investigations related to uranium and titanium sponge. But these are also national security related trade restrictions in that the Trump administration is saying that imports are hollowing out U.S. industries here that are identified, and as a result, they're concerned about those industries' abilities to supply the U.S. security establishment and defense needs. And so they've they've imposed restrictions on aluminum and steel and potentially the other three categories here, although they have not as of yet done so to automobiles, uranium, and titanium sponge.
I think it's fascinating that this is, we've talked about these different categories of trade-related impacts, but each of them, frankly, is done under a different legal basis, different legal regime, and so we've put them all together here because for companies the impact is the same. I mean, your business is being affected. You're not able to buy your raw materials as cheaply as you used to be able to. Your markets are being threatened overseas with competition. So the impact for companies is the same, but people, I think we do need to remember that the approach that we have to take to fight back and to protect ourselves in each one of these will differ, and that's just an unfortunate result of the complexities of the world. Okay, let's move on to the retaliation against the U.S. And Dave, I think this is pretty, this slide sort of says it all. Any trends or other sort of potential concerns folks ought to be thinking about in this scenario?
Yeah, I mean, just real quickly, what you're seeing here are mostly the retaliatory tariffs for steel and aluminum, with Canada and Mexico recently carved out because of the agreement that the Trump administration reached with those governments. Then also you see China and the EU with very large totals because of the aircraft dispute and then the China-specific 301 tariffs. And so, I mean, the takeaway here is just that if you're exporting to these markets, you may have already been hit, and they apply only to U.S. origin goods. So to the extent you have non-U.S. competitors, you're at a disadvantage.
Good. And I just saw a question here that we had probably skipped over while we were talking about India. The question is whether there are any tariffs in effect or planned on outsourced labor, i.e. software development. And that's something we can look into and follow up with you on. But no, I think generally these are on goods, and so I would not expect anything that I've seen so far to impact outsourced labor. Dave, or Jim, any thoughts on that?
I just agree to say that I haven't seen anything that would suggest that tariffs like that are upcoming.
Yeah.
Yeah, nor have I. And also, if that were going to become an issue, they'd have to think creatively on how they were going to do it, because there may not be imports coming back to the U.S. for them to retaliate against. So it could, it'd have to be some sort of tax measure perhaps to do that.
Yeah. Good. Okay. So moving on to topic 2, the impact on supply chains. This one, there's some information in the slides, and so we're just going to really just touch on this briefly. But basically, I think the point is that companies may feel like you're locked into the situation you have, that it's crystal clear how your tariffs are going, how your products are going to be taxed from a tariffs and customs basis. But I think one thing to take away is it generally is a little more complicated, a little more gray area than that. And Dave, you want to touch on that point a little better than I just did I did more from a layman's perspective, but from an expert's perspective, do you view that also, as I suspect you spend some time with clients, helping them figure out different approaches they can take in how they categorize their products, but maybe helps them in terms of tariffs they pay or don't pay?
Right. I mean, just a real quick on the basics of customs in terms of how the tariff is calculated. It depends on how you're classifying the good, where the good's coming from, the country of origin, and then of course typically the tariff is expressed as an ad valorem tax. So it depends on the value of the goods as it comes in the United States, and we'll sort of flush that out a little bit once we get to the examples of some of the strategies we can use. But and I'm just going to breeze through this really quick. Just the way the tariffs can impact your business. It obviously can be direct or indirect. It can increase your costs if you're importing stuff that's subject to the tariffs. can be indirect if you're not that actual importer, but down the supply chain. And then 3, obviously, if you're an exporter caught up in some of the retaliatory tariffs, that can hurt. And then 4, if you're a volume-based business, there can be macroeconomic trends or effects if trade is reduced that would impact your business. So we wanted to, give you kind of a big picture here in terms of what are some of the strategies we've been talking through with clients. If you're stuck with the tariffs, what can you do about it, essentially, or if you find that you're paying them, what are your options? So what are your options if you find that you're paying tariffs? We're going to outline a few of them for you here, although there are even more outside of what we're going to talk about. But one is, you can look at your classification. 2, you can renegotiate your supply contracts and or rethink your investments and your inventory. Another option is product exclusions, which we'll talk a little bit about, or persuade the government to exclude your products from the tariffs to begin with. And then finally, we've been talking a lot about the impact of these tariffs on businesses, but there are certainly beneficial impacts, particular industries, particular companies who can use trade law as a sword instead of a defensive hassle for them.
Yeah, I think, and there are other strategies that we haven't mentioned here. We'll try to get through as many as we can in detail in this discussion, but we probably won't get through everything. So feel free to reach out to us, separately and informally. Any of us on this call will be happy to talk through with you in more detail. But just one big takeaway is there's a lot of things you can do. Some of them are long shots. Some of them are definite things you can do in the short term. And this is just an area. It's a bit of a sandbox legally, and there are lots of different things. Okay, so on this, the exclusion processes. This is a very I think a bit of a well-known process, but I think a lot of companies still haven't participated in it. And this is. And I think a lot of companies have wondered whether it was worth their while or not to go through this process and put in an application and try to have their products excluded from the China 301 tariffs. And Dave, how has it turned out so far in your view?
Well, it's a difficult process to predict because the decision makers don't tell the public exactly how they're making their decisions. But you can see with respect to steel and aluminum, the hard and fast rule is if the U.S. industry objects, the exclusion is not granted. So you can see, the success rate's actually pretty high. If you are importing steel and aluminum, you've sought an exclusion, you've probably gotten it. But if the U.S. industry objects, it's a totally different story. More than 90% of the time, if the U.S. industry objects, you don't get it. And actually, that's closer to something like 99% of the time rather than 90%, especially in steel. And then the China-specific tariffs are sort of the opposite. The approval rate has been pretty low, 24% approved as of the end of last month. And just in terms of where are we at in the exclusion process, most of the List 3 and List 4 exclusion process for List 3 is just getting up and running, and we actually don't even know if there will be an exclusion process for the List 4, which it remains a proposal at this point. But that's where the vast majority of the trade is. And, I think if you're a company who looks at this and you're covered and you see a 24% approval rate, you're thinking, what's the point? Why would I bother doing it? Well, if the trade dispute lasts for years, and that was your only hope, even if you have a small chance of winning, it might have been worth, the effort of putting that together and asking for the exclusion process. And in terms of what's approved and what's not, Troy, wondering if you could speak to getting engagement from members of Congress and in politics to help companies' cause and how that affects this.
Yeah, I mean, this one, you know, I'll try to say this delicately, but I'll probably fail, but, you know, most government processes, you know, have a little bit of politics and are mostly, you know, because they've been formalized over years and years. It's a bit of a technical process. This one kind of was created out of whole cloth. The whole background was highly, you know, political. And so, you know, I've heard, informally, of course, that you know, USTR, frankly, you know, was only really, given the limited resources they had, they were prioritizing the ones that came with, you know, the support of, you know, of a congressional representative, and the ones that didn't, frankly, just weren't getting a lot of you know, a lot of attention. So this is one of those where, you know, and we'll close on some tips on advocacy and government relations, which, you know, again, as I mentioned, sometimes always make a little bit of a difference. In this case in particular, they were just key. You just really didn't, unless you went in and rallied support from your representatives, the governor's office, that kind of thing. It was going to be a tough sell. Maybe one last point on the exclusion process here is that on the flip side, in China, they recently announced that they're doing one as well over there. It wasn't the case. A few of the sort of cross-border industry associations had reached out to China and encouraged it to do that, and so they've got one that's in place now. And so, again, like, you know, for a U.S. company, you might think, what would be the point of even considering applying over there? Obviously, the intent of the exclusion process in China is to retaliate against the U.S. economy. The tariffs generally is to retaliate. But we've talked to our office over there and some folks in some industry associations, and it is clear that that U.S. companies are welcome to apply. And again, depending on the circumstance, if it's good for China, then you'll have a real shot. And if it's good for China, it probably means that your product is something that maybe you have strong support from customers over there, supply chain partners, or it's just you have a key product that would hurt for China not to be able to import at a certain rate. So for them, this is all, the retaliatory tariffs is a face-saving exercise and a negotiation ploy, or tactic rather, but nonetheless, they will be sensible, just as we have been on our side, in areas where it's good, it's good for them. So, think about that and consider whether or not, it makes sense for you to participate in the process, whether here in the U.S. or in China. Okay, let's move on to the next one. And Dave, this one looks really technical. So this is the strategy related to HTS and origin. What kind of takeaways would you suggest here?
Yeah, well, under both the HTS and country of origin, there are often times where it's really clear what the HTS classification is. It's really clear what the country of origin. If it's made entirely in China, country of origin is China. That's an easy one. But if you have multiple steps, it becomes unclear. Or under the HTS, it can be unclear what the proper classification is. And just some background on the HTS, it is considered a statute. So if you have technicians and engineers looking at the HTS classifications, as an attorney, it's important to remember that ultimately you are to use standard statutory interpretation methods to figure the classification out. I think on both HTS classification and origin, sometimes on valuation, what companies ought to be doing is really identifying the high-risk areas. Well, how do you identify high risk? Well, one criterion for that would be looking at what's your volume and value under a particular classification. If it's really high, you should really carefully look at that and make sure you've either got it right or or if it's an ambiguous one, that you have good backup for it. So if customs asks you for why you classified something the way you did, you're ready for it. Because those things, a lot of times, I'm always amazed at the amount of companies I work with that tell me things like, oh, we had a broker help us classify it, and we took the broker's classification, and we've generally relied on that unless we found something really wrong about it. And, that sort of treating all your imports equally isn't a very good way of mitigating risk. And a lot of these tariffs are HTS specific, although with China, we're getting to the point where all of them are now covered. But again, with China, they're country of origin specific. So if you have multi-country processing, it can get really gray very quickly in terms of what the correct classification should be.
I mean, it could be what I've seen, classifications are sort of organized by a company, back when it didn't matter which classification they were in, but now it matters, right? Or it could matter. So, look at them again.
Yeah, that's right.
Yeah, and just one point on that that's interesting for me as a person who's been in this area for a long time, but a lot of these tariff classifications nobody has thought about for years, if not decades, since tariffs went away. Yeah. And now all of a sudden these classifications are really critical, and even customs is, to a certain extent, looking at things they haven't thought about for a very, very long time.
Yeah, trade is feeling a little bit like, tax is always one of those areas where you weren't doing your company good if you didn't think as hard as you could about tax structuring your business and your revenues and all that, in the best possible legal way into the tax system. And from what you just said, Dave, it sounds very similar on the trade side. Be clever, think about it, do it all in a very legally compliant way, but you can structure things in ways that are to your advantage.
Absolutely, and if you're operating in a gray area, if you've looked at things carefully, you may identify that and be able to take a somewhat aggressive position and be able to back it up and ultimately win with customs.
On the next one, just in the interest of time, Dave, I think the main point here is that there are, sort of like on the classifications, your supply chain, people have contracts in place. There are things you can do to put the risk maybe in a better place where it more appropriately belongs through contracts and through analyzing your supply, your value chain relationships and contracts. Did I get that right?
Yeah, that's right. I mean, in a lot of these scenarios, the companies haven't really thought out the risk of tariffs because it's been tariff-free for so long, so you can sort of revisit that and see whether you can renegotiate things with the supplier or your purchaser. And I think related, that last point, Troy, in terms of considering the location of capital investments can be a strategic way to be thinking about tariffs and your investment decisions.
Yeah, I mean, I just believe to be prudent on that. A lot of companies that we've worked with have been a little bit, like, oh, geez, we need to move our manufacturing somewhere else, or we need to go, do A, B, or C, and maybe you do, but remember, the world's changing pretty quickly these days, so think hard about that, and also consider reaching out to on the governmental side, because it could be that, a place like here in Utah, there are things people can do for you to help offset some of that.
Yeah, that's right. And I'll jump in here. I won't take too much time, but as we look at contracts, when we talk about tariffs and price, certainly we all recognize that tariffs can impact more than just your bottom line, but they can also impact your relationships with your suppliers and with your customers. And so Troy said that you could look to the government for support. I think that's exactly right. At World Trade Center Utah, we're cognizant of kind of the larger trends that are going on and some of the often valid political reasons for the policies that are being made out in Washington. But here at World Trade Center Utah, and I tell you this is true across partners here in the state, we're very interested in trying to keep those person-to-person, those business-to-business relationships open. This is why we take companies to markets. This is why we bring investors over here and government officials, so that we can build those kinds of personal relationships that, despite the fact that you're in volatile times, that can sometimes damage damage the trust between you and the supplier, that there's an opportunity for you to demonstrate, and for the state to demonstrate that we have a long-term vested interest in the relationships between us. So keep in touch and keep abreast of what's going on here at the state level. Oftentimes we're bringing people in here who I think it would be valuable for many of you who are on the line today to meet with, to help build those relationships.
Yeah, I've been impressed with how connected and how knowledgeable your team is. Yeah, thanks. Okay, so the next one we'll just take 30 seconds on, but I will say, Dave, it feels, you look at it, this looks like litigation, and like suing the government or suing a third party, and that can be very expensive. Is this only a strategy for for the for people who have money to burn, or what would you say to that question?
Yeah, I think when you look at the slide, the top of it is a lower cost solution. Then once you get to the bottom, appeal to U.S. federal courts, that can be quite expensive, and it takes a lot of work. But if you're operating in a space where you're not sure what your classification is and you want certainty, or there's a lot of money at stake, you can ask Customs to tell you that's the first bullet there. And if you don't like the answer and you're willing to fight Customs, you can ask for their headquarters to review it and present legal arguments about why they were wrong. And then, if you don't like the answer there, you can keep going and go to federal courts and ask the federal courts to reverse Customs. That's the idea here.
And you'll learn a little bit at each stage whether it makes sense to move on to the next one, I suspect.
Right. Yes.
Okay. Moving on to offensive use of tariffs. And we don't mean offensive in the terms of offending people, but a lot of this is very offensive. For this slide, we mean tariffs that you can take proactively, measures you can do proactively in the trade realm that can maybe even the playing field for your company versus companies outside the country, or even tilt things to your advantage a little bit. So, Dave, what are we talking about here?
Yeah, so if you're a Utah company making widgets and you have imports of widgets or something pretty similar to widgets coming from other countries, and you're losing market share and otherwise being hurt by those imports, you can take a look at whether the imports are unfairly priced, which is called dumping, or subsidized, or both. And you can ask the U.S. government to impose tariffs on the competing imports. Likewise, if you're importing something and you suspect your competitors are essentially cheating by avoiding tariffs, you can report that to Customs, and Customs takes that very seriously, and they'll start an investigation of it, especially if you document it and provide some good evidence for it. So, one thing, if you're operating in this space and that sounds like your story, it's not like you're bringing a case on imports of steel or aluminum. You can bring a very narrowly tailored case to a specific product that if you feel like you're losing on profitability within a particular product line. So, it can be very targeted, kind of a remedy if that's what you're seeking.
I would just suggest, I think when the Trump administration first sort of signaled that they were going to be very supportive of these kind of measures, there was a bit of a rush to the White House, and a lot of companies, really pushed hard to get this kind of support. And that has run a bit of a cycle, but I think now but I will just say it's still the environment politically, and I would encourage companies, if you are considering something like this, just look at the landscape a little bit. It doesn't take much to see what else other people have done. Talk to your, to advisors, talk to your congressional representatives, talk to Jim, and get a feel for how much support you would have, which kind of leads us into the last slide here. We've just got a minute left, and so but we did want to make this point. We've talked quite a bit about government engagement. We help. This is something we just see as sort of important as a service alongside everything else we do is helping our clients be strategic legally. That involves an advocacy strategy. And so if you look there on that little box there in the blue, something someone said to me long ago, that is, I think very, very key here. It's better to make a friend before you need a friend, or just as advice, make friends first before you need a friend. And the idea there is, if you have to rush and sort of run into your congressman or your senator or the governor's office or the State Department for that matter, if you do a lot of business in a certain part of the world, commercial services, whoever it might be, if it's the first time they've heard of you, it's just going to take them a while, and also they'll have in the back of their mind, well, are these people only, my friend until they don't need me anymore? The government loves to support business. It's great for them to help build jobs, but they want to see that for them that they can see that value long term. They can help a company long term to build jobs. If it's but if they don't know who you are, it'll take time for them to get that trust level to where they feel comfortable that you're someone they can work with and do things effectively for the good of the broader constituency.
And Troy is exactly right on that. I mean, we have a small office that's in charge of providing these services for the entire state, and we look to make relationships with great companies like those of you who are on the line today. I would advise each of you to reach out to the people who are on the call, to us at World Trade Center Utah or others. There's really no wrong door here in Utah. We cooperate really well with each other, and we're looking out for the best interests of Utah business.
Having lived in states that are smaller populations and much, much larger populations, Utah's pretty unique. It's very, you can get access to almost anyone if you want it and you're sincere about starting that relationship. So with that, we've hit the top of the hour, a couple minutes over. We apologize for that. We thank everyone for listening, and as always, as Jim just mentioned, feel free to reach out to any of us at any time. Thanks.
Thank you, everyone.